Welcome to the Deep Dive. Today, we're really getting into some interesting material from Flutter Entertainment.
Yeah, we've got a stack here. Recent news, their earnings extra piece, and the main event.
Oh.
The Q1 2025 earnings report and shareholder letter.
Exactly. And our job really is to sift through all this,
Yeah.
cut past the corporate speak, and figure out what's actually going on with Flutter.
Where are they heading? How are they performing? What does it signal for the whole online betting and gaming scene? We're looking for those key insights, maybe some surprises.
And it's hard not to be impressed just initially by Flutter's scale, isn't it? I mean,
Yeah.
you got FanDuel, Sky Bet, PokerStars, Paddy Power, so many big names.
It's a huge global operation.
Yeah. And a share price mentioned here, LSE, 15,550 pence,
Yeah.
up a bit, 1.4%. Gives you a snapshot of their market standing right now.
Mhm.
Okay, so let's dive into those Q1 2025 results. What jumps out right away?
Well, first off, you see this steady growth in users and revenue. Average monthly players, they're up 8%. That's nearly 15 million people. 14.88 million, to be exact.
No, that's a lot of players.
It is. And revenue followed suit, also up 8%, hitting about $3.66 billion for the quarter.
Okay, solid top-line growth. But, I mean, the profitability story looks even more dramatic, doesn't it?
Oh, absolutely. That's where you really see the big shift. Net income. Well, they went from losing $177 million in Q1 last year to making $335 million this Q1.
That's quite the turnaround. A plus 289% swing, the report says.
Exactly. And adjusted EBITDA, which gives a clear operational picture, stripping out some items,
Yeah.
that's up a healthy 20% to $616 million.
Right. And that flows down to the earnings per share naturally.
Yep. Flipped from a loss of $1.10 per share to a profit of $1.57. Really significant improvement.
Definitely. Now, I did notice, digging a bit deeper, that their cash flow figures, operating cash flow and free cash flow, were actually down. What's the story there?
Yeah, that's a good point to pick up on. The company, they specifically called this out. It seems to be mainly about timing, about when the quarter actually ended.
How so?
Well, Q1 2025 ended on a weekday. Last year, Q1 ended on a weekend. Apparently, player balances, the money in their accounts, tend to be higher over weekends.
Ah, good.
So because of that timing difference, the reported player deposit liabilities were lower this time around. They're pretty clear that this timing effect is the main reason for the dip, and it masks the underlying cash generation, which they say is still strong.
Right, so maybe not a fundamental issue, more of a calendar quirk then.
Seems that way, based on their explanation. They're confident about the long-term cash flow picture.
Okay, so let's pivot to the U.S., because, wow, that market seems to be just firing on all cylinders for them.
It really does. The growth there is pretty remarkable. U.S. revenue up 18% overall.
And that's broken down how?
Sportsbook grew a solid 15%, but iGaming, online casino games, that really soared up 32%.
Up 32%.
Yeah.
And the profitability in the U.S. is accelerating even faster, right?
Yeah.
I saw that adjusted EBITDA number.
Yeah, that's the really eye-catching figure. U.S. adjusted EBITDA was 5 times higher than Q1 last year. $161 million.
5 times.
It really shows that operating leverage kicking in. As they scale up in the U.S., the profits are growing much faster than the revenue.
And FanDuel's still leading the market there?
Oh, yeah. Dominant position. They've got 43% market share in online sports betting based on gross gaming revenue, and even higher, 48% based on net gaming revenue that's after promotions and free bets.
Mm-hmm.
And they lead in iGaming, too, with 27% GGR. It really suggests, that having both strong sports and strong casino offerings allows them to cross-sell effectively. That's a big advantage.
And they're innovating, too, aren't they? Not just relying on existing stuff.
Exactly. They launched this Your Way pricing technology. Sounds like it gives more personalized betting options.
Right.
And they had specific things for March Madness, like parlay your bracket and these bet back tokens, trying to keep things engaging.
Speaking of March Madness, the report mentioned an unprecedented number of winning favorites. Sounds like that cost them a bit in the short term.
It did. Definitely led to more payouts than usual. Very customer-friendly results, as they put it.
Hi.
But, while it was a hit in the quarter, they seem confident in their overall pricing models. Sports results tend to even out over time. And actually, you can argue those wins might even build some customer loyalty long-term.
Interesting point. And on the iGaming side, what's driving that 32% growth?
It looks like their focus on attracting direct casino players is paying off. They mentioned site-wide jackpots being really popular. Apparently, over 35% of FanDuel customers played them.
Okay.
And exclusive games like this HUFN more Puffa slot seem to be a draw. They also hit a milestone over 1 million average monthly players just for iGaming for the first time.
So, U.S. clearly strong. Let's look internationally then. Sounds like a bit more of a mixed bag.
Yeah, internationally, it's more varied. Overall, things were pretty stable year on year if you adjust for currency changes. Revenue up 3%, EBITDA up 2% on a constant currency basis.
But there were some definite bright spots.
Oh, yes. They highlighted strong iGaming growth in a few areas. Southern Europe and Africa, they call that CA Central and Eastern Europe, or CEE, and also in the UK and Ireland. That helped offset weaker sportsbook results in Asia Pacific.
Okay, let's break that down. UK and Ireland, that's a mature market. How are they doing there?
Modest growth overall, 2% revenue increase. But iGaming was up a strong 9%, driven by premium games. Sportsbook was slightly down, partly due to less betting on horse racing. The key thing there is they're moving Sky Bet customers onto their own tech platform, and that seems to be going well.
And you mentioned Southern Europe and Africa is strong.
Very strong. SEA revenue grew 14%. And that was driven by a big jump in players up 25%, both sports and gaming contributing there.
Right.
Cecil, their Italian brand, hit a record market share in Italy, apparently. And Turkey's doing well, too.
Okay. But Asia Pacific faced some headwinds.
Yeah, APAC revenue was down 13%. That was mainly because of unfavorable sports results hitting their Australian sportsbook business. But the positive note there was India. Their iGaming business in India grew by 45%. So strong growth in that specific area.
Interesting. And Brazil, new regulations there, right? How's that playing out?
Brazil saw a big drop, revenue down 44%. They put this down mainly to having to re-register all their customers because of the new regulations.
So potentially a temporary disruption.
That seems to be the narrative, yeah. A necessary step in a newly regulated market. It's definitely something to watch, though, to see how quickly it recovers.
And internationally, they've been busy with acquisitions, too, haven't they?
They have. Just closed the Snai deal in Italy at the end of April. That's a big one. Makes them much stronger in Italy, which is Europe's biggest regulated market.
Right.
Lots of integration work happening there now. And they expect to close the NSX deal in Brazil soon, probably this month, May 2025. That'll form Flutter Brazil.
Okay. So zooming out again.
Yeah.
What's the overall strategy here? What are their main priorities?
They've been talking about this and model, the idea that they can do it all, basically. Grow organically, make smart acquisitions, and return money to shareholders.
Ambitious.
Yeah. And they also seem quite confident about riding out any economic downturns. They feel online betting and gaming are pretty resilient based on their past experience internationally.
And sustainability, responsible gaming, that seems prominent too.
Very much so. They position responsible gaming, or RG, as central to their long-term plan. They highlighted tools like FanDuel's MySpend getting good uptake from customers.
Okay.
And they invested quite a bit, $139 million globally on RG last year. They just put out their 2024 sustainability report, too.
So with all this activity, the results, the acquisition, they've updated their financial outlook for the rest of 2025.
Correct. The new guidance factors in those U.S. sports results, currency movements, and what they expect Snai and NSX to contribute.
And the numbers are?
Midpoint guidance is now around $17.08 billion for group revenue and $3.18 billion for adjusted EBITDA for the full year.
Right. And they're continuing the share buybacks.
Yep, the share repurchase program is ongoing. They expect to return up to $1 billion to shareholders this year.
Okay. And looking even further ahead, what's the long-term play?
It's all about the global regulated market opportunity. They estimate it could be worth something like $368 billion by 2030.
Wow.
And Flutter clearly believes its brand portfolio, its tech, its strategy, it all puts them in a great position to grab a big slice of that pie.
Okay, so let's try and boil this all down.
Yeah.
What are the main things for listeners to take away from this Flutter Q1 deep dive?
Well, I think first, the financials look pretty strong, especially that big swing to profitability. Second, the U.S. market is just incredibly important and performing extremely well for them, both growth and profit-wise. Yeah. Third, the international picture is more complex, some strong areas, some challenges, but they're actively shaping it with big acquisitions in Italy and Brazil. And finally, despite bumps like unfavorable sports results, they seem very confident in their overall strategy, their resilience, and they're emphasizing responsible gaming as part of that.
Okay. Which leads us to, the final thought to leave with everyone.
Mhm.
We see how fast this whole online betting and gaming world changes.
Absolutely.
So how might, say, future regulatory shifts or maybe some new tech innovation impact Flutter's big growth plans? Could it change their leadership position?
Yeah, or what new markets or even new types of products might pop up that we haven't even thought of yet. It could reshape the whole industry.
Exactly. So this has been a snapshot of a really dynamic company in a sector that's constantly moving. The future for Flutter and the industry. Definitely one to watch.
For sure.
Thanks for joining us for this deep dive.